So, thank you, Mr. Ghosh, Dr. Pant, and my panelists. I will talk only on the priority sector lending, basically whether it's a lost mission or is it has got a lot of opportunities. As I stand here, I come from a bank, RBL Bank, which has for the last many years consistently achieving its priority sector targets. In all the segments, in all the sectors, so we're happy that as a bank, we did these targets and we made money as well. It was never an obligation for us. We always treated this as an opportunity. Now it's the opportunity part, how do we look into, that is I'm going to discuss. Let us understand, on a lighter note, whenever we see, we get attracted towards the glamorous part of the things. Therefore, in a financial industry, you know, the high net worth professionals, the project finance and all those things, the glamorous part that gets the attention. The priority sector lending is the non-glamorous part. But unfortunately, this is what is going to drive the nation. It is like a Bollywood movie or a movie which is made an art movie. The art movie was the very best, well done, but they never repay you back. Most of the time you feel it, they don't repay. But there are examples of certain movies like People Alive, it made money, yet you know, they were very good examples of how the movies could be made. What I'm trying to say is priority sector mission is one of the most focused mission that the regulator and the government of India had. And I think if we do a detailed analysis, it has significantly, you know, helped India grow in the last 6 decades. Why I'm saying so, I was reading through the various reports of various states. Every 1 rupee of credit that went, the increase in SDP, state domestic produce, was 3 rupees, which means the kind of value creation the priority sector lending created in all of those states was significant. Now, why all the banks are facing the challenge? Why nobody wants to do it? Number one, it has to be because we don't understand this market. Our organization focus is not there, or we do not understand it because it is somewhere we think that there will be debt waivers. These are related to the farmers. There's a monsoon failure that may happen, so there's a credit issue. So there are certain, all these things that are related to the priority sector. Now they were there for the last 60 years, many banks have been doing priority sector. I think by now we have evolved models around which we can do priority sector. And one of the model which Dr. Pant was saying is the value chain finance model. As a bank, wherever we went, we knew an individual farmer will be, if we go individually, will be unviable. So we went with a whole system where we would work with the dealer, we will work with the processor, we work with the farmer, we will work with the women in SSG groups. So if you go with that approach, I think that entire transaction, that entire productivity management issue gets resolved. So the point is, how do you figure out the entire model for priority sector management? Now, when we talk of priority sector, it has got multiple components, but let me address 2 components here. The most painful component for most of the banks have been agriculture, and that too agriculture, which is direct. There has been a paradigm shift in a policy in July 2012 when RBI suddenly said, you know, lending to corporates won't qualify and you have to go directly to the farmers. And that's where the challenge started. And the other is 10% lending to the weaker sex. I have just to say, if you do direct lending to farmers as per RBI norms, the weaker section will automatically addressed. Why? Because 84% farmers in this country are small and marginal. If you address them, the weaker section challenge automatically gets addressed. So we don't have to make separate efforts. And that's why we are addressing that. Now, the other part which we are saying for the rural segment, we have to recognize that India still today remains an agrarian economy. And therefore, whether it is MSME, artisan, allied activities, they all get that strength if the agriculture sector grows well. As somebody said, in the course of discussion, that we are doing a lot of crop loan, but capital formation in agriculture is not happening. I think that is where a balance we have to strike a balance and see that there is at least 30 to 40% money is going for the capital formation. And there is, I think, where focus is getting now. Earlier there was a crop loan approach, but now it is a lot of approach on capital formation. We have seen in the areas where our bank did well in agriculture, our MSME targets got also achieved. Because based on those, there were small agro-processing industries, there were traders, which would qualify under the priority sector. So I think the holistic view of entire priority sector, understanding how the entire gamut of things within a value chain approach, if it is understood well, then it is implemented well, we can address the priority sector. Priority sector is not about these conferences. Priority sector is not about talking to the farmer. It is about going to the farmer. And that's why we have a workforce which actually understands what are the needs of actual rural India at the small and marginal farmers level. I think that is where the institutions have to build their capabilities and to deliver this kind of targets. Now, there are a couple of things which are always, from a banker's perspective, I'd say. I think priority sector in its current form is doing a lot of service to the nation, however minor tweakings can be done. And however certain points need to be addressed. The number one is the government, the regulator at any point of time, and that the word waiver should get out. The fear of waiver of loans, that has to get out from the mind of banker, and it has to get out from the mind of the farmers, both. Then only we will be able to prevent vitiating this credit culture. The other point is, there are n number of schemes running for the same type of things. There are multiple ministry schemes. I think if you can dovetail all those schemes, we can make the credit and the implementation way more effective. I think many of them are like the horses are running in different directions, and therefore we are not moving in those things. The other point is, why RIDF? If RIDF is taken out from the credit which was meant for small farmers, where we could not deliver, can we create a credit guarantee fund out of RIDF? Every year there should be certain which can be used for small and marginal farmers. And definitely the subvention schemes, I think they should not be through the banks. If there is any benefit that has to be given, it should be given directly to the borrower, so that banks play a complete on same level playing ground. These are some of the thoughts. Thank you very much. During the course of discussion, if there's something I'll discuss. Thank you very much.